Welcome to T3 Live's Tuesday Market Sit Rep. Matthew Buckley, the Chief Options Strategist, and the futures are indicating a significantly higher open. Why? Who knows? Maybe confidence out of Europe. There certainly wasn't confidence out of Japan last night. Kuroda, it really was the Kuroda comedy hour. Japan's economy is showing some sign of weakness, but everything's great. It really was. Every other sentence was a contradiction of the sentence before. Very interesting press conference out of Japan, and it doesn't really bolster my confidence. Have a couple of trades on EWJ on that are turning into kamikaze trades. They're either going to be great or they're going to fly right into the side of a battleship. And I'm starting to believe it might be flying into the side of a battleship. So we're going to take a look at that this morning in our primary live trade brief. But as I said, the futures are indicating a pretty significantly higher open. Twitter getting absolutely hammered this morning on weaker than expected user growth and also revenue. I think they beat by a penny or something like that, but shares are getting obliterated, down over $6 right now. Apple, a couple times in the news. Alibaba might tie up with Apple Pay. So that's relatively good news for Apple after the bad news of Apple Pay being shellacked by Rite Aid, CVS, and potentially Walmart there. But really big on the radar is that the fact that yesterday Pomo officially died. Permanent open market operations ceased yesterday at about 11 in the morning when the Fed pumped their last $1 billion in this market. What's that mean? Get ready for massive swings in volatility in this market. We are going to see triple-digit up and down days going forward as the Fed leaves this market. Don't worry about it. They'll be here to pat us on the head and wipe our nose with QE4 once we really, really freak out. This morning, we are going to see a couple reports. We're going to see durable goods and core durable goods. Whenever we see the word core, it means X something. In this case, it means X transportation items. So potentially market moving and impact the futures. S&P K-Shiller is going to be at 9, and the Conference Board Consumer Confidence number at 10. That will be market moving. But yesterday, big swing and a miss with our flash services PMI and pending home sales. Reading the pending home sales reports, a majority of the pending home sales realtors are citing for the implosion is the inability for clients to get financing. Isn't that great? So the Fed pumps all this liquidity into our banks, more or less, and the banks sit on it and don't lend to us. That makes sense. That's how we get out of this mess. That's the last bullet, really, in Barney Fife Fed's gun, is to stop paying banks interest on the money they sit on as reserves. Now, I get we've completely done this knee-jerk in the other direction, making banks sit on all this money. They're not lending it, Madam Chairwoman. Stop giving them interest, or actually start charging them interest. And you want to see this economy turn around, banks will start lending again. I'm not talking to people, with a negative 500 credit score who are waiting tables getting an $800,000 loan for a house. Obviously, those days are over with, but the banks are not helping out this country. There, rant complete. FOMC meeting. Next 2 days, we'll get the statement on Wednesday afternoon and the funds rate. We know what that is. We could fill in the blank right now. But the statement is what we're going to be parsing to see if there's any signal of an interest rate rise. That will not happen. Advanced GDP on Thursday, that will be market moving. GDP comes out in three types: advanced, preliminary, and final. Obviously, advanced is the earliest and is going to have the most impact. So we'll see, obviously, this 4.6 print that was revised off of 4.0. I think it's just, people ask me if I believe China's numbers when they come out. I don't believe our numbers, folks. I think this is going to be revised down. And you can see with the consensus being 3.1 about how much the 500-pound heads really don't think that was a realistic print. Weekly unemployment claims, and Madam Chairwoman will speak and probably clarify how the market reacts based on their written comments and also their spoken comments on Wednesday. Some inflation numbers on Friday: personal spending, personal income, Chicago PMI, and University of Michigan consumer sentiment, some revised numbers. And then Friday night, when everybody's trick-or-treating, manufacturing PMI out of China, If it's that bad, it'll definitely reverberate to our markets on Monday. If it's kind of in line, I wouldn't worry about it. Remember, whenever we're talking about PMI, looking for a 51.1 handle, 51.1 handle, so mainly in line. Whenever you see a number above 50, that means expansion in manufacturing. Below 50 is contraction. So we'll see if the China slowdown continues. Okay, I got to run. Got a primary live trade brief at 0900 this morning. Happy hunting. Make sure you hedge. And I'll be back with Wednesday's market sit rep from beautiful Hartford, Connecticut. We'll see you.